Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video we're going to talk about fearless, confident options trading. And some of you are probably wondering, why are we starting with this, right? It seems kind of odd that a options education website, especially if you're starting track 2 with us here at Option Alpha, that we'd first be talking about how to be fearless and confident in your trading versus, actually placing trades and figuring that out. And so we'll get to all of that in track 2 here, but I want you to understand that there are 5 things that you do not control, and you actually need to stop trying to control them if you want to be wildly successful trading options. And really, it all comes down to this fear of losing and how we can overcome this. See, this is what most people do in the market. They just always look behind. They're always fearful of the drop or the rally or the crash or whatever may happen. And they just have to understand that there's things that you don't control in the market and there are things that you do control. And you have to focus on the things you do control. So this is a favorite chart of mine. We use it all the time in coaching with people here at Option Alpha. And this is really how most people go about their investing career. I mean, they are basically greedy and they buy when they feel confident and assured that the market is stable or whatever the case is. And when they're fearful, they sell or they just make stupid decisions because they just do it out of fear. And then they repeat the cycle until they're basically broke. But once I can get you to recognize and accept these 5 things that we're going to tell you as truths, your confidence and courage as a trader is going to explode. So Mark Twain famously said, "Courage is resistance to fear, mastery of fear, but not the absence of fear." And I really love this quote because it's not saying that we need to not be fearful. Fear is a good thing. Fear keeps us alive. As human beings, we've been fearful all of the existence that we've been around. We're fearful of predators, and we're fearful of losing people, and we're fearful of whatever, the dark, whatever you're fearful of, that keeps you alive. But we need to understand and recognize what things we control that make us fearful and what things we don't, right? So here's the thing. These are the 5 things that you cannot control. And I promise you tried to control one of these things, or at least one of these things, before in the past. Obviously, you can't control the weather. I mean, we could put a bunch of things up here, but I just wanted to start off with something, really simple. Like, you can't control weather, you can't control disease, can't control if you get cancer or not. Number 2, you cannot control other people. Especially in the stock market, there are millions and millions of other people with different opinions, different backgrounds, different philosophies, different ideals, different risk profiles. You can't control other people. And that's a really hard concept to understand because you think you can control them, and all the stuff that you've ever probably been taught about the market assumes you can control other people and their behavior, but you just can't. Number 3 is you can't control the math. And what I mean by this is, like, for casinos, because I use casinos a lot as an example, you can't control the math that casinos have an edge in every game and gambling scenario that they put out there. The casinos have an edge. You can't control that math. You can assume you're a better player than some people, but the vast, vast, vast majority of people cannot control the math behind the ability for a casino to win. It's impossible. When it comes to the stock market, there are hard facts about what math works and what doesn't, about the probability of making money or losing, about correctly pricing a trade or not based on risk, about the likelihood of a stock going up or down based on its historical trends. That math you cannot control. You can assume that you can control that math, but you can't. Number 4 is direction and reaction. Probably should have been number 1 on my list, but it's number 4 on our list. It doesn't mean anything 1 through 5 on this list. But direction means you can't control the direction of a stock ever, no matter how many times people assume that they can. You can never control the direction of a stock. And more importantly, you can never control the reaction of the market to that stock or some news event or some industry report. It's impossible. Back when I was working at BB&T Capital Markets and I was in research, we would meet with the CEOs and CFOs of these REITs. And when we met with them, we knew that they were going to have a really good quarter. Like, their numbers were really good, their earnings were really good, their costs were down, all of this stuff, right? Everything that tells us that the market should react favorably to that quarter's announcement and earnings announcement and that the stock should rally. But in most cases, the stock might fall or it might rally. But in most cases, it might fall because maybe the market assumption was that the company would have done even better than it did, right? This happens all the time actually in Apple. Apple's a great example of this. The company will have amazing earnings, great profit, great revenue, and the stock falls after earnings, right? So you can't control the reaction of the market. What you think is really good news, somebody else or a group of other people might think is really bad news. And again, unless you understand and accept this as a truth, you really can't move past anything that you do here, trading stocks or options or any type of investing. You can't control the market. Number 5, the most important one here for sure, is you cannot control black swan events. I was doing some research before doing this video and setting up these slides, and I kind of like had to look around and read a bunch of articles on like how to prevent a black swan or how to protect yourself from a black swan. And the reality is that you have no idea when they're coming, and neither do I, right? Nobody does. And that's why they're black swan events, because they're unforeseen. If they were known, or if there was some way to see them coming, then they wouldn't be called black swan events. But you can't control a black swan event. And that's okay. That's an okay assumption. That doesn't mean that you shouldn't invest. It doesn't mean that you should take all your money out of the market because you don't know when this thing's going to happen. It just means you have to control the things you can control. And black swan events are some of the things that you cannot control. So again, you have to accept these facts as truth because they will happen again, every single one of them. And it's not a matter of if, but when. Meaning you're going to have losing trades. It's not a matter of if, but when. You're going to be in a black swan event. It's going to happen again in the future. Mark my words, a black swan event will happen that is quote unquote unforeseen, that nobody saw coming. Okay? You're never going to be able to pick the direction all the time. You're never going to be able to predict the reaction of the market. You can't control other people, and you can't control the weather. Bad storms will come again and again. You cannot control any of these factors. So once you understand it, you're able to then confidently move forward, accepting what you can control. Okay? So I always relate this to driving. I think driving is a great analogy of control. Okay? And I can tell you this as I talk about this right now, I've definitely had very close friends of mine that have been killed in car accidents with drunk drivers. So I'm definitely sympathetic to this concept, and I'm not using this concept to exploit anything. I'm just trying to use it as a means to learn what we're talking about here, especially with black swan events. But when you get into your car, there's only a certain amount of things that you can control, right? If you really think about it, you can put your seatbelt on so you can buckle up. You can make sure that your windows are clear, that you've got enough gas, that you're paying attention, that you're not texting or calling on the phone, right? That your music's not too loud. You can drive in between the lines, right? So you're not driving on the other side of the road. These are all things that you can control driving your vehicle down the road, trying to get you from point A to point B. And you can drive the speed limit, right? You don't drive over the speed limit. You don't swerve. You don't, tailgate. You do all these things that you can control. But let me ask you this. Tell me in honest terms, who can control the drunk driver? And again, I'm sympathetic to this. I've had friends that are killed in drunk driving accidents. It's horrible. Okay? But you cannot control. Every time that you get inside of your car, you get inside, you buckle up, you do everything right. You do everything perfect. You can't control the person who was an idiot and dumb enough to get behind the wheel, intoxicated, that's going down the road beyond the speed limit and hits you head on at 90 miles an hour. Unfortunately, you can't control that. There's only so many things that you can control. And again, I relate this to black swan events because the drunk driver in this scenario is the black swan event. The only thing you can control is making sure that you're as safe as possible, but you don't know that it's coming. And again, it's not that you shouldn't trade or you shouldn't invest. It's that you should just recognize that this is the reality of the market. And once you realize that, then your confidence goes up because now you know, okay, look, I can't control this stuff, but I can control some of the things that we're going to talk about here. So here's what I say. And we'll be talking about each one of these points in a lot of detail as we get further through track 2 here at Option Alpha. But you need to focus on what you can control. So what you can control as an investor is your position size. You can choose to invest all of your money at one time in one trade. Or if you're smarter, you can choose to invest a little bit of money at one time in every trade. So that if that trade goes really bad, if you get hit by a drunk driver, if that trade becomes the black swan event that you didn't know was coming, it doesn't blow up your account and you don't lose all of your money. But again, that's something you can control. I guarantee, and I have people that do this all the time. So we'll have people, even in our pro and elite memberships, that'll email me and say, Kirk, I lost like 20% on this trade. And And I say, how'd you lose 20% on that trade? And they say, well, I had too big of a position size, right? And I tell them, like, I don't feel sorry for them that they lost that because they controlled their own destiny. Like, we tell people not to do that and then they go do something different. I don't really feel sorry for that person that they lost all that money because they controlled it. They were the ones who put themselves in a position to make a stupid decision. And again, this is probably hard advice, but maybe nobody's told you this before, and I think I'm the person to do it because I'm confident in what we talk about here and what we teach people. Number 2 is you can control strategy selection. So again, we'll talk more about this through track 2. If you've already been through track 1, you know we talk about it there. But you can control what strategies you choose and how you set up strategies. That's a big part of being successful trading, is trading the right side of volatility. Number 3, you can control what targeted probability you focus on. As a stock trader, you naturally target a 50-50 probability. There's no debating this. If you are trading stocks, trying to day trade, trying to quote unquote pick stocks, you've got a 50-50 chance of winning. That's just how the numbers work out. You can assume everything else that you want to about the market and assume that you can, predict something with some awesome indicator and technical whatever, but it's not. You're a 50-50 trader trying to trade stocks. With options, you can target whatever probability you want of success. That means that you can go out and focus on trades that have a 90% chance of success, or a 70%, or an 80%. And that's the beauty of options, is that we have the ability to make higher probability trades. Number 4 is you can control order pricing. Now, this one's a big one for me. Again, we'll go through this further down in track 1, but you can control order pricing, meaning you can determine if you are getting a fair price for a trade or not. And not a lot of people talk about fair pricing in the options world, but it's insanely important that you should be getting a fair price based on the risk in the trade. And I relate this a lot to either going to buy a piece of real estate or going to buy a new car. If you're going to buy a new car and the new car that you're going to buy, is worth $20,000 because you've looked it up on Kelley Blue Book and all these different things. And the dealer says, hey, my car that's on our lot, well, you have to pay $30,000. You have the choice to say, I'll pay $30,000 and overpay, or I'll look someplace else and pay $20,000, or I won't buy the car today from you. That is your choice. That's something you can control. So when people always tell me, I made a bad decision, I got into an investment, I overpaid. Well, that's your choice. That was a choice that you made based upon the information that you had at the time. And I think order pricing is a huge, huge component of being successful. Number 5 is your emotions. This one's a big one that a lot of people talk about, but it basically comes down to recognizing that you are either fearful, greedy, or whatever the case is, and being able to control those emotions and move forward with consistency and persistence. I believe that the 2 biggest hurdles to people being successful in this business are the ability to be consistent and persistent. And I'll relate it back to working out, like being healthy, right? We know what we have to do to be healthy. You have to go to the gym. You have to eat right. You have to avoid sweets and sugars. That's not anything new to anybody. But the hard part about being healthy is going to the gym. So being consistent about going every day or every couple days, being consistent with not eating sweets and not eating, too much fatty foods and too much food with sugar, and being persistent in doing that over a long period of time. Like, you can't be healthy for 5 days and assume it's going to carry on for the next 2 years. You have to be persistent for a long time. And the same ideas apply in the options market and investing market. If you want to be successful, you have to be doing all the things that we talk about here: the right position size, the right strategy, targeting the right probability. And you've got to do it consistently over time. And you have to recognize that sometimes your emotions are going to try to pull you out of that consistency pattern. Just like sometimes you're not going to want to go to the gym. And sometimes you're going to want to splurge and eat some ice cream or eat some, cookies. And that's okay. You just have to recognize when those happen and pull yourself back in. So you have to control your emotions. For me, just to kind of like dovetail off of this for a second, for me, the ability to control my emotions is easy because I understand the math behind everything we do. And again, we talk about math a lot here at Option Alpha, but I understand the math behind the market. I understand clearly where my probability of success is, where my edge is as a trader. And so when I have a bad trade or a trade that goes against me, people always ask, they say, how do you keep so calm? And the reason I keep so calm, even if I have a bad trade go against me, is because I know that those are going to happen, that I'm going to have them. But I also realize that the more and more and more I trade at the same probability of success level, and the more I target that edge in implied volatility, the closer I'm going to get to reaching my goals. And it's just a matter of time. So again, for me, it comes down to emotions. For me, is basically controlled by my understanding of the math. Okay. So again, here at Option Alpha, we're going to give you all the training tools and education you'll need to be successful, hands down, and it's all free. But you first have to recognize what you control and what you don't. I really believe that this should be the building block for everything that we're going to talk about here in track 2, because without understanding and really accepting what you control and what you don't, I don't think that you can be successful in this business. I really don't. And that's a hard truth. And I'm sorry if I'm the one that has to explain that to you and has to maybe push that on you. Maybe you've never heard that before, or maybe no one's ever loved you enough to actually tell you the truth. But that is the reality, is that there are things in the market that we don't control, that we try to control all the time. And once we just move past those, we become more confident and we have more courage to stay and stick with the system through the next couple of years, a couple months, whatever you want to do, so that you find success. So again, thank you so much for checking out this video. If you've got any comments or feedback or any stories that you want to share or revelations that you had from watching this video, please let me know. Add them in the comment section right below. If you love this video and think it would be helpful for other people out there, please share it online. It's one of the ways that we help spread the word here at Option Alpha. And until next time, happy trading.